that jobs report we got is starting to show a collapse in the labor market. So employers shed 701,000 jobs in March alone. It was the worst report since 2009. And many economists are warning that it could get much worse from here, with unemployment rate potentially rising to record highs. So for more on this jobs report, I want to bring in Michelle Girard, Chief U.S. Economist at NatWest Markets. And Michelle, thanks so much for joining me this afternoon. That 701,000 was a much worse report than we had expected, and the data only runs through March 12th. So when we take that into account, do you think this signals a bigger collapse ahead?
Well, I don't know if it signals a bigger collapse than we were expecting, but we're certainly going to see a much worse number for April. I mean, maybe we picked up more of the layoffs than we expected in the March period than we had anticipated. But the bottom line is, we know, looking at the number of people that have filed for unemployment benefits, even just through the end of March, we've got 10 million people that are still reporting to have been laid off, but are not getting captured in the payroll numbers. And that's what I'm saying. The April numbers, you could see a drop in payrolls in just that month that actually rivals the total number of job losses of over 8 million that we saw all through 2008 and 2009. So it's going to be a very, the April numbers are going to be even far more jarring than these March numbers have been.
Michelle, how bad do you think the numbers could get in April if you had to take a guess at it?
Well, that's what already we know that 10 million people have filed for unemployment benefits in just the last 2 weeks of March. And the first week of April, I can't believe we're anticipating another 5 to 6 million people have filed. I mean, we could be looking, between the time these March data were calculated and the April numbers get calculated, that you can have 15 to 20 million people that were laid off. And so, I mean, these numbers are, like, as I said, just staggering. I can't obviously pinpoint. I can't even put a handle on it. But the point is, it will be multiples and multiples of anything that we've seen in the past.
Meaning how many of these jobs are actual jobs lost versus those that are furloughed employees, and what that could mean when we try to gauge the potential recovery that we could see in a couple months. How are you taking all of that into account at this point?
So for these numbers, if you're receiving pay, even though you're not working, you're still counted as employed. But what the numbers do show, I mean, half of the people who were reported unemployed in April had been unemployed for less than 5 weeks. So we know the driving factor is obviously individuals who have lost their jobs as a result of COVID-19. The hope is that actions that are being taken by the government, will to encourage either firms to keep workers, or more importantly, to bring workers back online when the activity levels pick up, when the restrictions are lifted. The fiscal plan that was passed, the phase 3 $2 trillion plan, includes loan forgiveness for companies that bring their workers back by June 30th. So the hope here is that, that April number is going to look really scary, but that we'll see a pretty quick rebound as we get into May, and particularly June, as things open up, that maybe our hope is that many of these workers are brought back.
Michelle, when we take a look at the labor force participation rate, that fell to 62.7% last month. How crucial is it for that number to not continue to fall here in the short term?
Well, it's such an unusual time. People who don't look for work fall out of the labor force. But you can understand in this environment, whether they're worried about their own health, so they're not actively going out and conducting job searches, whether they're sick themselves, whether they're forced to stay home to care for somebody who's sick. There are many reasons, honestly, right now that people could leave the labor force that have really nothing to do with their longer term intentions to look for work. So I will say, looking at the labor force participation rate right now in this month or two, it could be misleading, because there could be many factors that are at work here that we normally are not dealing with.
Michelle, how long do you think it will take us to get back to where we were before the coronavirus outbreak?
So, John, that's a really important question. In terms of GDP, first of all, let me just say, in terms of growth rates, so we have this this double digit. We have a 30% decline in Q2 GDP. That's our forecast on an annualized basis. We do have it rebounding 20% in the third quarter and another 8% in the fourth. In level terms, that will not get us back to the level of GDP pre-crisis. It will actually recoup only 2/3 of the decline. It will take well into 2021 before you get the level of GDP back to where it was. And when we think about employment, unfortunately, I think the unemployment rate is not going to get back. I think we're going to end this year at probably around 9%, and we'll make further progress, but it's going to remain well elevated, far higher than the levels we saw before the virus, long into the next year or two, unfortunately, on the unemployment rate.
Michelle, I want to ask you, because it's interesting, the situation that we're in now, because it's not only the policy or the fiscal response, but it's also the scientific response, just in terms of when we're trying to determine how long of an economic fallout or how big of a fallout this could be. How are you factoring the scientific response into your modeling? Because it's probably something that you haven't encountered in a long time, something very different than what you are historically have been doing.
There's so many angles to this that are unprecedented, we keep saying, in terms of trying to factor this in. I mean, a lot of work that's been done does suggest that for every week of shutdown or lockdown that you have, you lose 0.75% to 1% off of an economy's growth rate. So that gives us a rule of thumb of perhaps how to estimate what the economic impact will be. And then you're sort of left to try to figure out, okay, well, when might the lockdowns, be, or the restrictions on activity be lifted? And, looking first of all at many of the models, we have our own internal model. There are models at Johns Hopkins. I mean, there are many models that sort of forecast infection rates. And so we kind of rely on that. They do suggest in the U.S. maybe peak infection rates occurring in the middle of April. Maybe then by the beginning of May, you'd see restrictions start to be lifted. And if you look at China as an example, where you saw restrictions being lifted in early March and activity kind of stabilizing over the course of that month, and we're 2 months behind. All of this leads me to think the bulk of the impact on the economy may well be seen and finished by the end of the second quarter.
All right, Michelle Girard, thanks so much for joining me today.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.